Good evening, everyone. Warm welcome to Super Coaching Regulatory Bodies YouTube channel by Testbook. My name is Madhav. I welcome you all in the next session. I'm pretty sure that you must enjoy the discussion for this particular session, and we are going to learn many new things related to the finance current affairs. So before I start the discussion, just let me know in the comment section quickly that I'm audible, visible, everything is fine. We are good to go so that we can begin the discussion without any further delay. Please let me know in the comment section that I'm good to go so that we can begin the discussion without any further delay. And even I'll request you all to quickly copy the link of this session, share it with your friends so that more and more students, they can join us live and they should get to know that yes, this session is live and they can join for finance current affairs. Chalo. Guys, I don't know whether you are aware of this point or not, but finance current affairs are going to play a really very important role in your upcoming examination. And today, what all things we are going to discuss in today's session, we are going to discuss few important updates. First of all, we'll discuss report on trend and progress of the banking in India 2023, which has been presented by RBI. This is one of the most important reports which will be asked in the upcoming examination. Secondly, there is an update given by RBI related to the withdrawal of 2000 rupee denomination banknotes. Then the third, we will be talking about RBI has set up a committee on free AI. Now the question is, what is this free AI? We'll discuss that in much detail. And moving ahead, we'll talk about the balance of payment statement which has been shared by RBI recently. If you all are ready, let's get started with the first news of the day. The first news talks about trends and a report on trend and progress of banking sector. I hope you all are very well aware that RBI comes up with this particular report on annual basis, which means it's an annual report, a comprehensive report in which RBI shares the status of the banking sector. What all things are shared, what all data are being shared in this particular report, which is important for your examination point of view. The first thing which you need to remember is, so the latest report has been presented and this report is based on the financial year 2023-24. Secondly, this is an annual report. And this annual report is presented by which organizations? And it is presented by none other than the central bank of the country, and the name is RBI. Moving on to the next point. What are the key highlights? I would say what all parameters are being discussed by RBI in this particular report. The first parameter is asset quality. Second is projection for NPA. Third is credit growth and economic outlook. Fourth one is digital transformation in banking sector. Fifth is capital adequacy. And the sixth one is increasing banking frauds. Please pay attention and try to understand this point carefully. If I talk about asset quality of banks, what does it basically mean? So here RBI comes up with the gross NPA data of the bank, as well as RBI shares the net NPA data of scheduled commercial banks, and this data help us to understand the current scenario of the banks, that what is the credit risk on the bank, what amount has been declared as NPA for these banks. Second is projection for NPA. In case of projection for NPA, future projection for the upcoming financial year has also been done, that whether the NPA will fall down in the future or it will increase. Surprisingly, this time RBI has projected that India's banking NPA is going to increase in the upcoming future, which is need to be remembered, which I will be sharing in few minutes. I'll share the data with you in few minutes. The third point is credit growth and economic outlook. That means what credit growth has been recorded and what is the impact on of the credit growth on economic development. If I come up with this answer, in an economy, if credit growth is increasing, that means more and more loan is given by the banks. The amount which is borrowed, it will be invested, and this investment will lead to increase in GDP. It will lead to growth of infrastructure, as well as it will lead to the overall development of the economy, which is a positive sign. Fourth point we have is A digital transformation in banking sector. So in the banking sector, recently we have witnessed CBDC and we have witnessed many other initiatives which have been taken by RBI in order to achieve the targets of financial inclusion. Last point is related to your CAR. I hope you must have heard about cash adequacy ratio. As per Basel law, it should be 8%. As per RBI, it should be 9%. But the question is, what is the current capital adequacy ratios of scheduled commercial banks of the country? So let's try to decode all these terms. Let's move with the first one. The first statement we have, that is now on your screen. We will be discussing about them in detail, and this data, trust me guys, this data is going to be really very important for you, because these data can be asked directly in the phase 1 examination. Even this data will be helpful to write a good descriptive answer. So the first, if I talk about the asset quality, if you remember, RBI has introduced Asset Quality Review 2015. After this announcement, every bank of the country is supposed to share its asset quality data. That means every bank has to come up publicly announcing its NPA as well as net NPA values. If you don't know, gross NPA basically means, so gross NPA, what is gross NPA? So it is NPA of the bank divided by total loan provided by the bank into 100. So this is basically what? So this is basically your gross NPA. But if someone asks you what is net NPA, sir, out of gross NPA, when you subtract provisioning, out of gross NPA, when you subtract provisioning, the value which you receive is, that is known as net NPA. The value which you receive is, that is known as what? So that is known as net NPA. Now, if I talk about these terms, as per the latest data, the asset quality improvement has been witnessed. The gross NPA of the bank is recorded as 2.5% in September 2024, and it was 0.57% value for the net NPA. Now the question is, sir, is this an improved value? My answer is yes. My answer is yes. NPA value is 13-year low. NPA value is 13-year low. That means consecutively India's NPA is decreasing, banks' NPAs are decreasing, and this time 2.5%, it is the 13-year low value which has been recorded. Moving on to the next point. Next point is profitability growth. If I talk about the profitability growth, what does it mean? Sir, it means return on asset, return on equity. I don't know whether you are aware of these two terms or not. In this report, RBI has discussed, or RBI has shared the data on return on asset as well as return on equity. Before we move ahead, before we understand what these terms are written, before you get to know what is return on asset value or return on equity value, what I believe is you must know in detail what actually the meaning of return on equity is, what actually the meaning of return on asset is. See, the first point from where I'll start my discussion is return on equity. We know this very well that in a company issue its equity shares to the public. If I'm talking about a public company, or company may even raise the funds through private issue, and this private issue is done against company's equity. In very simple terms, it means that if an individual or maybe an investor is investing in the company, is investing in a company and holding equity of a company, which means, let's say I am equity holder of a company that is 20%. This shows that I am the partner of this company, that is 20% partner. If near future company will earn profit, out of that profit I will be getting 20% of the share. I will be getting 20% of the total profit share. Good evening Ravina, good evening Reshma, good evening to both of you, and rest also, if you are live, do reply in the comment section please. So this is return on equity. On the other side, so what do you understand by the word return on asset? So return on asset basically means the earnings earned by the company, in relation to the total asset, What I'm trying to say? I'm trying to say in this manner, if you must have heard or studied about your balance sheet, we know that asset is equals to liability plus equity. I hope you all are very well aware of this term. When we calculate return with respect to asset, that is known as return on asset, and when we calculate return with respect to equity, that is known as return on equity. So net income divided by shareholders equity is return on equity. Net income divided by average total asset is known as return on asset, is basically termed as return on asset. Secondly, if I talk about return on equity, sir, it can be calculated through balance sheet, because you can get the value of equity from balance sheet, you can get the value of asset from balance sheet, and profit or net income is received from the income statement. Similarly, you can get the income statement, you can use the income statement for profit value, or I would say net income value, and the balance sheet will be used to to get the term that is asset and equity. When to use? Now the question is, so when we should use return on equity and return on asset? This is very important point. This is very important aspect which you need to understand. Whenever a company talks about return on equity, it is basically to attract the investors in the secondary market. For example, you want to invest in the secondary market through shares. Now you are looking forward that in which company you should invest. One of the important factor while making the decision is return on equity. That means if I am investing 1,000 rupees today, what return I will be receiving on my investment, that is basically known as return on equity. But if I talk about return on asset, so return on asset is basically used to calculate the earnings earned by utilizing the asset. Earnings earned by utilizing that value of asset. For example, there is a company and the company's total asset value is, let's say, 1,000 crore rupees. If the company's total asset value is 1,000 crore rupees and against that 1,000 crore rupees, company has earned a profit of 10 crores, this shows that the asset value of 1,000 crore is capable to generate net income of only 10 crore rupees. That means you are not utilizing the assets efficiently or adequately. So remember that when you compare the profitability of the companies, then you use return on equity. But when you assess how effectively a company is converting into its asset or using its assets to convert it into income, that is known as return on asset. So which means this is very important. If someone asks you return on asset will be used, so return on asset term will be used to assess how efficiently company's asset is being used to earn income, and return on equity is basically utilized while making a decision in which company you should invest or while comparing your investment decision with the other companies of the same segment. Next point is what are the benefits? Return on equity is easy to calculate. It is easy to calculate. It reflects the management effectiveness in the shareholders' capital. It can be used across the industries and it is useful for ensuring the management effectiveness with respect to the fixed asset. What are the issues? It can mislead for the company with high debt level. If the company has a high debt level, in that particular case, your return on equity may sound pretty well. It may sound pretty high, but the moment you are calling for the dividend, it is pretty low. Secondly, needs to adjust for effect of stock buybacks, but it is not the case in case of return on asset. In return on asset, the first misleading is for newer company with non-earning assets. It's very easy to present a huge value or a high value of return on asset, which will deteriorate over the period of time when your assets turn into non-earning assets. Last is, whenever you go through with return on equity, you need to keep in mind few things. First thing is, return on equity can be inflated by companies that are highly leveraged, and asset-based differences can make cross-industry comparison challenging. So you should not use ROA for cross-industry comparisons. It should be used within the industry comparison. It should be used to check how effectively the company's asset is used, and ROE should be used while making an investment decision, when to invest, how to invest, in which sector, in which company to invest, so that I can earn good return on equity. Got it? Now, coming back to the point, sir, the scheduled commercial banks, they have demonstrated a good value, which says that return on asset is 1.4% and the return on equity is 14.6% in financial year 2023-24. Moving on to the next point. The next point is capital adequacy. If you remember, as per BIS has asked the banks to maintain capital adequacy ratio equals to what? Sir, equals to 8%. But RBI said, no sir, in India we have Nirav Modi, we have Vijay Mallya, 8% से काम नहीं चलेगा, इसे थोड़ा बढ़ा दो. तो RBI ने इसे बढ़ाकर कितना कर दिया? 9%. Now in India, banks they maintain 9% of capital adequacy ratio. Along with this, banks maintain a capital conservation buffer. The capital conservation buffer which is maintained by the banks is 2.5%. I hope you know this. It is calculated against RWA. What is RWA? Sir, it stands for risk weighted asset. If someone asks you what is risk weighted asset, it basically means sum of risk on every bank's asset. Sum of risk on every bank's sum of weighted risk on every bank's asset. So when you add the risk, for instance, if I explain you, let's suppose I am a bank, I have given loan to, let's suppose, 10 parties. Now I'll calculate the risk for each and every party, and the risk value which I have calculated for each and every loan, I'll add them so that I can obtain a value of RWA, and against this RWA I will be maintaining these ratios, or I will be maintaining these reserves. So technically it should be 9.5 plus 2.5, which is CAR 9%, and CCB, that is capital conservation buffer, 2.5%. But if I talk about only alone CRAR is 16.8% as of September 2024. Now you must be wondering, sir, बैंक ज्यादा मेंटेन क्यों करेगा? What is the benefit? देखो, ये कोई रिजर्व नहीं है. बैंक इज नॉट कीपिंग इट्स फंड्स असाइड. बेसिकली व्हाट इज इट? अगर मैं इसके बारे में थोड़ा डिटेल में बात करूं, if I talk about the same in much detail, then what I'll say, please pay attention. Sir, it is basically capital. It is basically capital to risk weighted asset ratio. So capital means we are talking about banks' equity. We are talking about banks' reserves. We are talking about banks' debt funds. We are talking about banks' preference shares. So these are collectively, in very general terms, these are collectively termed as bank's capital. So the bank capital with respect to its RWA, that is risk weighted asset, should be greater than or equals to 8% as per BIS. This shows that at the time of risk, at the time of loss, bank can easily, at the time of risk, at the time of loss, bank can easily use its capital to counter these RWAs in order to avoid the possibility, or situation of insolvency. That is what I'm trying to say. Sir, is earning per share is equals to return on equity? When we say earning per share and return on equity, please pay attention on the screen. Here you can see net income upon shareholders equity. Net income upon shareholders equity. This is you are dividing net income with the total equity value. Once you get that, then you divide it with number of shares, then you will get earnings per share. I repeat. For example, I'll give you an example for this. Please pay attention. This is going to be interesting and I'm pretty sure that you are going to enjoy this. If I say a company is earning, let's say company has earned 200 crore rupees. This is the company's net income. Okay. And the company's equity is 2000 crore. Company's equity is 2000 crore. Now in this manner, if you ask me what is earning, what is return on equity? So return on equity is 200 divided by 2000 into 100. What will be the percentage? So this goes with this. This is going to be 10%. So return on equity gives you the return or the earnings company has earned against your equity value, or how well the equity has been utilized to earn return. The term which you are saying, that is somewhat different. That is somewhat different. So please pay attention on it. You said that what is earning per share. Now I'm saying that the net income is 200 crore rupees. Okay. And I said total equity value is 2000 crore. Total equity value is 2000 crore. Let's suppose one share price. Let's suppose one share price is 1000 rupees. Let's suppose the share price is, I'm talking about even the face value. The face value of the share is 1000 rupees. If the face value of the share is 1000, then I would say 1000 into number of shares is equals to 2000 crore. It is equals to 2000 crore. So 1000 goes with 1000. So what is the number of shares? The number of shares issued by the company is 2 crore. The number of shares issued by the company is 2 crores. Now, what is the net income? So net income is 200 crores. What is the number of shares? So number of shares is 2 crore. Crore goes with crore. 2 goes with 2. So that means what is earning per share? So earning per share is 100 rupees. In this manner, earning per share is 100 rupees. On the other side, if you calculate this earning with respect to the face value, so it is going to be 10%. This is going to be 10%. But if I talk about market value, let's suppose the market value of the share is 2000, then the earning will be 5%. Then the earning will be 5%. I hope the entire discussion, the way I have done is, now it's clear to you. I hope it is now clear to you. Is it clear? Is it clear, everyone? If it is clear, just give me yes, sir, so that I can move ahead. Okay, thank you. Moving on to the next point. The next point talks about technological advancement. So emerging platforms like UPI as well as ULI, that is Unified Lending Interface, and Open Credit Enablement Network into the enhanced credit access for small business individuals has been recorded. Along with that, we have witnessed there is increase in mobile and online banking transaction, and most importantly, RBI has introduced CBDC, which is going to come up with huge changes in the economy over the period of time. Last point is financial inclusion. So National Strategy for Financial Inclusion 2530 will deepen the financial inclusion initiative of RBI recently. But the most important factor which I would try to discuss over here is that is report that has been raised concern about the banking frauds. So in this particular report, it has been stated banking frauds has increased to 21,367 crore rupees for April to September 2021. That is for the first half of the financial year 2024-25, which was only 2,623 crores last year. If you see, there is an increase almost 9 times, almost 8 to 9 times increase has been witnessed. Almost 8 to 9 times increase has been witnessed in case of this particular scenario. Is it clear, everyone? Is it clear, everyone? Shall we move ahead? Okay. Now let's move on to the next news. The next news talks about the withdrawal of 2000 rupees banknote. For this news, you need to learn few facts, few figures which are important, and these facts and figures can be asked in your upcoming examination. So if I start my discussion in this, the first thing which you need to remember over here, is the first point from where I'll start my discussion. That is, Reserve Bank of India has announced a withdrawal of 2000 rupees denomination banknotes. As we all know, that this announcement was done back in May 2023. The status of the withdrawal of 2000 rupees banknote is published periodically by RBI. The last release was published on 2nd of December 2024, and now this is the I would say status which is shared on 1st of January 2025. So what is important? So this date is important, that is May 2023, in which RBI has announced the withdrawal of 2000 rupees denomination. And since then, as of the data 31st December 2024, 98.12% notes have been received, or the notes have been received or returned back to the banking sector. So this is really very important. The total value of circulation was 3.56 lakh crore at the time of May 2023, and it has now declined to just 6,000 crore rupees or 6,600 crore rupees, which means 98% of the notes have been withdrawn or have been returned by the banking sector. So these few figures are important. Just remember them. That is more than sufficient. That is more than sufficient. Moving on to the next point. The next point is third news of the day. RBI Committee on Framework for Responsible and Ethical Enablement of AI. So to develop a framework for responsible and ethical enablement of artificial intelligence, which is termed as free AI. For this initiative, RBI has set up a committee. Remember that this committee comprises of 8 members, and this committee is going to submit its report within 6 months, and this committee is going to suggest comprehensive and resilient framework for artificial intelligence which can be used or which should be utilized for the Indian financial sector. What all names are important out of this? Chairman is very important. Who is the chairman? Sir Pushpak Bhattacharya, the professor of IIT Bombay, is appointed as the chairman. The rest are few of the members. Out of all these members, if you ask me, this name is important, Abhishek Singh, because he is the additional secretary. If you want to add something else, then you can add the last name, that is S. Pati or Suvendu Pati. These are the 3 names important. But if I talk about RBI Grade B examination format, as per the RBI Grade B examination format expectation, you should focus on the chairman name as well. The last point which you need to focus upon is, so what are the functions of this committee? This committee will assess the current level of adoption of AI in the current financial sector of the country. It will review regulatory and supervisory approach to AI with a focus on financial sector across the world, and it will identify, this is very important, it will identify the potential risk which are associated with AI in financial institutions like banks, NBFCs, as well as fintechs. We have payment system operators and many more. Last but not the least is, this committee will suggest suitable compliance requirements so that AI will develop the financial sector in the near future, and it will also safeguard the Indian economy in the same. Last is, recommend a suitable framework including governance aspects. So this is very important. A suitable framework will be recommended by this particular committee, and that framework will be utilized how ethically AI can be adopted, or AI applications, AI models can be adopted in the financial sector of the country. Is it clear, everyone? So first news was related to what? If I talk about the first news, the first news is related to the report on trend and progress of banking in India. 100% you will find at least 1 to 2 questions in the phase 1 examination from this report, and this data is going to help you a lot to write a good descriptive answer for the finance paper. Secondly, you must know the data of 2000 rupee note returned. Remember this figure. This will help you in the descriptive writing answer, and the date will also help you, that is 19th of May. Secondly, this is a phase 1 potential question. If someone asks you free AI, what does free AI stands for? Sir, it stands for Framework for Responsible and Ethical Enablement of Artificial Intelligence. Committee set up by whom? It's set up by RBI. How many experts are appointed? Sir, 8-member committee is appointed. Who is the chairman of this committee? The answer is Pushpak Bhattacharya is the chairman of this particular committee. These are the areas which can be asked in the examination. Last but not the least is your balance of payment data. See, RBI is not going to ask you the quarterly balance of payment data. Then why I have come up with this particular news? Sir, I have come up with this particular news intentionally, and I'm going to give you a homework. What you need to do is download the PDF of this particular session, which will be available on my Telegram channel. After downloading it, read all the terms. One is current account, then we have primary income, then we have secondary income, then we have direct investment, portfolio investment, NRI deposits, ECBs to India, Then there is a term that is reserve assets. You need to decode all these terms. What actually current account is, what is capital account, what do you understand by direct investment, what do you understand by portfolio investment, what is the difference between current account and capital account. Whenever we talk about balance of payment is provided in how many accounts. All these, I would say, conceptual aspect of balance of payment is need to be clear to everyone. So what you need to do is you just download this PDF, read all these terms, in much detail, and even the data which I have shared with you. After reading the data which I have shared with you, you will find n number of terms which you are not clear with. For example, what is external commercial borrowings? For example, what is internal remittance? What is outgoing remittance? What is foreign portfolio investment? What you should do, download the PDF and start commenting in the comment section. The terms which you want me to discuss in the next session, or before the next session I'll give you a small video on balance of payment, and in that particular video I'll discuss all those terms or concepts in detail. Once the terms and concepts are clear, you can easily learn these figures, you can easily understand this content which I have shared with you. Is it fine, everyone? Is it fine, everyone? Is it fine, everyone? Okay. So that will be all from my side. I hope the homework is clear to you. You will be going through with this data and then you will be commenting all the terms related to balance of payment you want me to discuss in the regular sessions. Now, if you want to clear your RBI Grade B examination, we have Lakshya Batch 2.0. Do enroll in this particular batch. Use code MADHAV in order to enjoy maximum discount. Trust me, the moment you join this particular batch, it will increase your chances to clear RBI Grade B examination, and that too in the very first attempt. So that will be all. For a while, we'll catch you in the next session. You can download the PDF from the given Telegram link. Good luck. God bless you all. Bye-bye. Take care.